All right, let's talk about something big. I mean, when a company that holds over 3% of all the Bitcoin that will ever exist makes a major move, yeah, you pay attention. We're breaking down a landmark announcement from Strategy Inc., the world's largest corporate holder of Bitcoin. And their surprising pivot to cash, well, it might just tell us a whole lot about the future of crypto on corporate balance sheets. Okay, so here's how we're going to break it all down. First, we'll get into their two major announcements. Then, we're going to explore why on earth they're suddenly stockpiling US dollars. After that, we'll unpack their wild new financial forecast. And finally, we'll connect all the dots and figure out what this really means for the industry. So, first things first, let's get right to the headlines. What did the company actually announce in this press release? It really comes down to two core moves. So here are the two key pieces. Number one, they've created a massive cash reserve. And number two, they've completely torn up and rewritten their financial outlook for 2025. Now, these might seem like two totally separate things, but as you're about to see, they are deeply, deeply connected. Let's dig into that first move, shall we? Why would a company that is so famously, almost religiously dedicated to Bitcoin, suddenly decide to build a fortress of US dollars? And let's be super clear about the scale we're talking about here. This isn't some small rainy day fund. We're talking about nearly $1.5 billion in cash. That's a serious war chest for any company. So what's all this money for? Well, you can think of it as a dedicated, kind of walled-off fund. It's specifically designed to pay the company's fixed bills. You know, the interest payments it owes to its lenders and the dividends it's promised to shareholders. And the company's CEO, Feng Lei, he makes the purpose crystal clear. This reserve gives them a 21-month buffer. It's basically a direct message to investors that says, hey, no matter what the price of Bitcoin does, we can meet our financial promises for almost 2 years. And this quote from founder Michael Saylor, wow, it just brilliantly illustrates the bigger strategic picture. This isn't them backing away from Bitcoin, not at all. It's a really smart move to insulate the company from Bitcoin's notorious price swings. It lets them hold on to their crypto through thick and thin without ever being forced to sell at the worst possible time just to pay the bills. Now, that volatility Saylor mentioned, that brings us right to the second major announcement, a pretty dramatic update to their financial forecast. And it all hinges on the wildly fluctuating price of that one single asset. Just look at this shift. It's pretty incredible. A month ago, their entire financial plan was built on Bitcoin hitting a super optimistic target of 150 grand. Now, after a bit of market turbulence, they've scrapped that single number for a much more conservative and wider range that tops out at just $110,000. And that, of course, begs the big question. What does changing just one number, the assumed future price of Bitcoin, actually do to their projected profits and losses? Well, the answer is kind of staggering. Okay, so this is the crucial point. Look at that enormous swing. Just based on where Bitcoin's price lands inside their new range, their operating income could vary by over $16 billion. It could be a $7 billion loss or a $9.5 billion profit. This is the very definition of volatility. So why is their income so incredibly sensitive to this? It all comes down to a new accounting rule. See, now companies like this have to report the fluctuating market value of their 650,000 Bitcoin directly on their income statement every single quarter. So every price dip is a paper loss and every rally is a paper gain. That's what creates these absolutely wild swings you see in the forecast. So let's zoom out and look at the big picture. We've seen the cash reserve, we've seen the new forecast. But what does this strategic shift really signal to the market? Yeah, beyond the numbers on a balance sheet, what does this actually mean for the industry? Why should we care? This move is about so much more than just managing money. It's about de-risking their entire business model, right? Separating their day-to-day operations from the chaos of the crypto market. It's about building trust with more traditional investors by guaranteeing they can pay their debts. And honestly, it shows a new level of corporate maturity, proving they can be both a huge Bitcoin believer and a responsible public company. And that leaves us with one final, pretty provocative thought. By building this fortress of cash to protect itself from market storms, is this company creating the blueprint for how other public companies can hold Bitcoin, manage its insane volatility, and not just survive, but maybe even thrive during the next crypto winter? I guess only time will tell.